Hello, hello, hello. Welcome to Al Stock Trades. What's going on, everybody? All right, so this is going to be one of those quick videos. Sadly, I don't have a lot of time right now, so I just wanted to just go ahead and give you guys a quick update. What's going on, Patrick? Hey. Beach. What's up, Brandon? Let's go. All right, so we're up literally 8%, almost 8% today. In 5 days, we're up 15%. So we're doing pretty well. Looks like we're rebounding. We're going to talk about what this rebound means. Overall, we're up 211% year to date. From the bottom, where when they told you to sell, when they wrote the article, the hit piece for you to sell, we are up 382.6%, but we were up actually from before 464%. So very excited. Hey, Ken is back in the game. What's going on? Yes, sir. Clove Army. How's everyone doing today? I already bought back in 2 weeks ago. Yes. Oh my God. Has it already been 2 weeks, Ken? Has it already been 2 weeks? Oh my God. Time flies when you're having fun, doesn't it? All right. So, very quickly, we're just going to be spitting out some facts right now. If you look at the simulated projection for Clove, this is again part of our stock terminal here. You can see that, the projection is showing that in the next 30 days, we should be above $3. It's been saying that for our stock terminal for the past week. So people that are inside with all the other stocks that we search, again, 2.5 billion outputs, you can search the whole stock market to your desire, and limited output usage, until your freaking fingers fall off, right? So, and you can see it's going. I don't recommend your fingers fall off, of course, right? But yeah, you can see that, we should expect more green coming in. Now, what's going on? Well, if you look at here, the S&P is up 0.5%, not even more than a little 0.5%, and then NASDAQ a little over 0.5%. But you can see the Russell's up 2.49%, right? So now you're starting to see kind of what we've been saying for the past 2 years regarding how small caps are going to prevail. So what's next week? Next week, I believe, is the FOMC meeting, right? Yeah, FOMC meeting is next week, Wednesday, right? We're going to get a rate cut. Right? We're going to get a rate cut. The damn rate cuts, right? I told you, right? We've been talking about this, right? Regarding the intrinsic value, discount rate, all this stuff, right? Rate cuts happen. It's good for us, right? That means money's going to want to find itself into things that can make money. They can, like free cash flow and all that, right? So Clover's going to be one of them. So very quickly, again, this is our Mastering Stock Market course. Actually, before I even do that, again, coupon code SAS. We've been talking about this for a while. It is going to expire by the end of September. So obviously our product works, right? We're minting a lot of millionaires, right? Take advantage, lifetime access, prices will increase. So take advantage of that. All right. So going here, looking at the intrinsic value calculation real quick. If you don't recall, you remember how Clover Health did its thing with the 44, had around $44 million in free cash flow, plus 25 on the $1 million of free cash flow in Q1. That's around 69 million year to date in terms of its free cash flow. So if we go ahead and put that in 69, and we go ahead and go to 10 years into the future at 11% growth rate at 496, you can see that we have a bull case of $3.40, a base case of $2.47, and a bear case of 192. So you can see that, again, the green here is the base. You can see the base case is right over here. And if you go to Clove stock price for the past 5 days, or let's just say for the month, you could see it rebounded right at the $2.50 region, and it rebounded here again in the 2.50 region. So whoever tells you intrinsic value doesn't work, is obviously is more of a day trader, swing trader, not really an investor. You can go ahead and look up intrinsic value calculation from Warren Buffett and all the greats. Again, I've analyzed all the billionaires in the world, and they all have this in common regarding the ones that invest on Wall Street, right? So you could go ahead and do the same due diligence I did, which took me over 10 years, or you can go ahead and join our platform and go ahead and hit the ground running and start calculating your own intrinsic values within 24 hours or within a minute, depending on how hungry you are, okay? So you could see that the base case is starting to solidify itself. Like I told you from many weeks ago, I said that the stock is being fundamentally responsive, which means that every quarter now, if they increase free cash flow, it's going to be added to the intrinsic value calculation, and it's going to obviously go up. Again, I don't know how much they're going to increase in free cash flow next quarter, but let's just say they do another 45 million or 49 million, or sorry, 44 million. That's 113 million of free cash flows. You do 113. So then all of a sudden the stock, now the base case goes to $4, right? So you can see it's going to start incrementally changing. I'm not saying it's going to go to $4 next quarter. I don't know the free cash flow, right? All I know is the one that's, it's 69 right now, right? So you can see the base case is starting to solidify itself, and it's starting to basically respect the intrinsic value calculation. Now you're starting to see how accurate the intrinsic value calculation is. Now, you might ask yourself, well, Al, why do you always, for yourself, again, not financial advice, I'm saying, why are you saying I'm going to sell at $25 or $30? Well, because I've done an intrinsic value calculation and I've done my estimates, and I believe this is what the company can grow at. And then it's going to essentially go to base reality, right? In the beginning, when a company is negative free cash flow, negative net income, we talked about this a lot in our, mastering and our stock terminal. Very quickly here, question: isn't 11% growth too low? So look at the most recent quarterly earnings report. They're growing at 11%. I'm just giving you what the market is seeing Clover Health right now, right? Which shows you how accurate our intrinsic value calculation is. They are not growing at 20, 30% right now, right? If they were, then I'll put it. But right now, if you look at the last earnings report, you'll see that it was 11%, right? So that's where I got the 11%. So hopefully that makes sense. Okay. I need raise price target close to the current bull case. Good, exactly. So you can see people are starting to calculate this, and they're going to continue calculating it as Clover feeds us more information. The thing is, what I liked it when it was 60 cents, when no one was doing price targets, I was setting my own price targets, right? And now you're going to start to see the power of when a company becomes free cash flow positive and then income positive. Again, there's a lot of people out there that spew a lot of bullshit, right? That don't know what they're talking about, that literally say intrinsic value calculation is not real, or it doesn't, doesn't exist, or, it doesn't make sense for Clover. These people are all, idiots, right? They're very stupid, right? If you go ahead and go to Stanford University Intrinsic Value Calculation course, MBA. Here, you can go ahead and go to Stanford, and you could go ahead and take this class, accounting-based valuation. You have to get accepted into Stanford, and then you would have to pay Stanford tuition, right? Stanford. I don't know if it's this class here. A little bit of this class, right? But you could go ahead and say Stanford MBA cost, right? And then you could go cost of attendance, and you could see the single student for a first year of MBA. MBA is usually 2 years, is $130,000, right? So you take, 130 times 2, that's $260,000 to learn this intrinsic value calculation. Here we are, obviously giving lifetime access with data, which, destroys, again, Stanford is where Peter Thiel graduated, right? So I'm just kind of giving you an understanding here, right? Of the type of education you're getting, right? The privileged learn about intrinsic value, right? So this is why a lot of people don't know about it, because it's just not mainstream, which is good because it gives us an opportunity to have an edge. And again, this channel is very small, so it's not like people are going to know this all the way, right? And so I believe this is one of the most accurate intrinsic value calculations on the market. Okay, I spent 10 years on this, right? More, right? I keep saying 10 years. I keep having look at my gray hair. It's freaking crazy, right? It's more than 10 years. So now that we went ahead and did this, let's go ahead and really quickly go ahead. Oh, that's Stanford. I copy and pasted it wrong. Let's go ahead and look at Clover Health. And again, let's just zoom in here real quick, and let's look at Clove, and let's look at the day. Okay. All right. So you could see 250 was a very good support line. It was a technical support line. And it was a fundamental support line. You could see it's formulating that W, right? Nice little, that's very bullish, right? Just like how we formulated that W there. Boom, 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 boom. we're formulating in here. Who knows? We might get another insider buy, right? We can go swoosh, right? So you can see this is the beauty of the automated AI automatically graphed intrinsic value calculation, right? You can see like the beauty of this, right? And it's really good, right? It shows you, you don't even have to be a smart technician to do this. It just does it automatically. So you could just get to the investing part, right? Again, not financial advice. You can see here kind of oscillating, same concept, right? So I'm very excited for what's to come. Let's go ahead and open up the minute real quick. Very good. So we got that $3 resistance level we'll see, and then we can go ahead and maybe start rebounding, and we're going to go ahead and test these new highs. Remember I told you around like 350 to 390, right? $3.50, $3.90. We can go ahead and redo this here. So we can go ahead and look at the week real quick. And you can see kind of where we're at right now. We're kind of battling here. Then we're going to be battling $3.15, $3.90. Then we're going to go to $4.19, which I think what's going to happen in their third earnings report. Then we're going to go to the Boeing 747. Okay. Yeah. Okay. Yeah. Here it is. Glad you are a stable person. Unlike, yeah. So if I just want to point out something very, very funny. So if you go ahead and go to Meet Kevin real quick, and if you go ahead and just go to his videos, it just, what is he doing? Like, what the hell is he doing? It's over, right? They use these words. It's over. One of these days, he's bullish, right? And then literally, so 2 days he's bullish. 3 days ago, mega, I can't even, mega crash, right? Bad, right? What else? Crash, right? It's over, right? Bad. Again, let's just continue with our case study real quick. Okay, this one says drunk. Okay, so what the hell's going on here? Okay, people take financial education forms from this individual, right? People take this, right? But the thing is, this gentleman makes a lot of money on YouTube, given his enormous amount of views. You would have to kind of calculate your own intrinsic value based off of what he says versus, for example, someone like Tom Lee, who's consistent. You hit Barry Wilson, you hit it right on the node here, right? You hit it right on the moment here, right? An investor is consistent, right? So honestly, if you go ahead and go to this, video real quick here where it says bullish and go to the comment sections, someone said, I think I'm developing bipolar disorder just watching your videos. He is bullish now. Okay, let's see what else. I said yesterday I'm going short, and today I come to my audience and say I made money. And he seems upset, right? This guy, right? Flip, flop, flip, flop, flop, flop. You could see people are, your takes are more schizophrenic than the market itself, right? So if again, this is, if you run your portfolio to these videos, I wish you good luck. That's all I can say, right? We are more focused on common sense and logic, and we don't sway with market emotions. We use market emotions to our advantage. Don't get me wrong. We analyze market sentimental analysis, but we make money off of it. We don't give into it, right? So, right, because we're trying to be like smart money, right? So let's go ahead and take a look at this real quick here. So I think I got all of the comments here. I don't know what you're saying, my friend, but I love the dabbing. Okay. Hey, what's up? Hey, Pedro, what's going on? Okay, I just saw your comment there. Hey, good. What's going on, man? Yeah, one of the OGs. He's our gentleman that created the testimonial video. Very excited. Check it out on the alstocktrades.com website. Yeah. All right. Let's see what else. Love the price movement. It looks very healthy. I'm very happy. Exactly. Hey, man, I appreciate you guys. Thank you for watching. Right. All right. But yeah, that's all I have for you guys. I think. Yeah, that's all I have for you guys. So yeah. So for all the individuals that are interested, coupon code is SAS expiring by the end of the month. Take advantage. Again, our platform works. As you can see, our picks, what we're passionate about works. Again, not financial advice. It is an educational platform with lifetime access to data, which you will never find, right? This is like impressive, right? So, and again, if you want to do it the hard way, you can go to Stanford for 2 years and then maybe walk out understanding after $250,000 in debt. And that's not including with interest, right? So, ladies and gentlemen, and again, we have a lot of people from the MBA join our platform too, because sometimes you have to supplement because MBA programs don't teach you this, right? There's only a couple. I think Columbia teaches you about value investing, and Stanford, I think, right? Anyway, ladies and gentlemen, it's a privilege and honor, and I'll see you on the next one.